Welcome to the video on trading multiple time frames, a very, very important topic. So one of the reasons that using multiple time frames is very important is because when you have two time frames that align, that give you a good buy signal or good sell signal concurrently, you have a higher probability of a winning trade. Why is that? There's a market logic to it. The market logic is that you have some people looking at one time frame. For example, here we have the daily chart. Oh, you can't see that, can you? All right, let me bring that down for you. Sorry about that. Okay, there we go. And so there we go. Okay, so this is the spiders. But the point is, this is a daily chart. So you'll have some people, for example, looking at a daily chart and trading off of that. So that's one group of market participants that are looking for signs. So a sign that would be a pretty obvious one that a lot of people trade is the market coming up, breaking through this resistance level here, coming back down in resistance, then becoming support, and the market going up. That's a very traditional technical analysis thing for people to be watching, and especially when it's a significant support or resistance level. And that one is because if you go over here, you'll see that that level is off of these highs, these major highs here, which basically we had a triple top. 1, 2, 3. Here, I'll mark that for you. Easier to see if I mark it. I've had people tell me that. So there's 1, 2, and 3. So triple top trading pattern. By the way, I did a video on that too on YouTube if you want to read about triple tops or triple bottoms. And so a lot of people have looked at this. And the more people who see something, the more people respond to it in the future. And the more people that respond to it, well, that means you got more people buying, more people selling, and therefore it's more likely to be a self-fulfilling prophecy. And that's really how markets work, is it's a big auction place. And the more people that are buying, selling, it's basic supply demand. And so that high then is going to be one that a lot of people see. So again, when people see this very basic technique, I mean, even people who aren't real strong technical analysts will look at that and they'll know, they'll mark that high there. And they're going to be watching how the market responds to that previous high. If the market bounces off of it, they're going to be bearish. We're going to have some people who will take profits into that, which is probably why you have that one red bar there. And the market goes above it. And then it comes back and says, well, wait a minute, let's see. Are we really serious about that? We got above it, and you're going to have people be a little skittish. And then when it moves back up, even here, you see these bars here, for example. These bars are a bit of a hesitation, aren't they? You got a doji bar, you got a narrow range bar, another narrow range bar, until we break above the high of this bar, and then you get your big candlestick. And that's when the market has a real extra confidence. So this is your first significant move, and then there, step 3. Okay, now the problem is so that, yes, that is a great pattern. We love it. However, the challenge here is if we take this trade based on the daily chart, we're getting in about halfway past the move from this low to that high. In fact, even less, and then that high, and now we're all the way back down here. So it's a late entry as far as I'm concerned. And so the problem is the reward on it is not that great. And we want not only a high win-loss ratio, that's got a pretty good high win-loss ratio on that type of a trade, but it's not a great risk-reward ratio. It's not too bad, but it's not stellar. We want a better reward-to-risk ratio. So how do we get a better reward-to-risk ratio? Well, the same answer. We use multiple time frames. So let's bring up our longer time frame, in this case a daily chart. In this case, a weekly chart. So now I have the weekly chart on the right and the daily chart on the left. So we'll call the daily the shorter time frame, the weekly the longer time frame. Now, we have a nice setup over here on the weekly as well, right in this area here. So trend is up. That's the 50-period simple moving average. Got a wave 1 and a 2, so that's a first retrace in the trend. And then we get a very nice 3-bar candlestick pattern for a bullish signal. By the way, this black line is the 15 EMA. Now, as that comes in, you see early November. So it comes in around this time right in here, early November. What happens on the daily chart? Well, we get a gap up. Boom, nice big gap up. Okay, let me bring my crosshairs on here. So with my global crosshairs, you can see where these match up. There we go. So let's just do it this way here. Okay, so now you can see we got in a lot earlier, or we could have potentially gotten in a lot earlier if we would have looked for the setup on the weekly chart instead of the daily. Now, we want a good signal, a good trigger, if you will, on the daily chart as well, but we're primarily looking for the setup on the longer term chart. And by the way, I'm using daily and weekly charts, but this can apply to any two time frames. You could use a hourly chart and 4-hour chart, or shorter time frames if you want to as well. So the point is looking for the setup on the longer term chart now. What that does, okay, look where we are here with our crosshairs. Don't know if I can keep that there or not with my drawing tools here, if that's going to work. But here was our entry before. Remember, breaking above resistance and retracing back to support. And so we got in here at about, I'll say somewhere around 220 or so. Now we're able to get down, or we're able to get in here somewhere around, let's say 214, 213, 14, 15, somewhere in there, depending on where you would actually take your entry. And oh my goodness, look at that. You've doubled your profits, roughly. So, and you know, that's where it's gone so far. So our initial reward, if you would have taken the setup on the daily chart, is that. Your reward, if you took it on the weekly chart, is that plus that. Huge difference. Huge difference. So in this case, about double. And so therefore, I like to always look for setups on the longer term chart and then look for triggers on the shorter term chart so that I get a superior risk reward ratio. I also find, as we said at the beginning of the video, it also increases my win-loss ratio. Now, the one thing that I will say is the downside of this approach is that you don't get as many trades. And that's just a logical thing. If you're waiting for trades on the longer term chart, well, there's just not going to be as many trades because there's not as many bars in the same period of time. And so one of the ways to resolve that is simply be trading more markets. Have a variety of markets that you trade. I do trade a lot of non-correlated markets so that I get a lot of opportunities on the longer term chart. So very, very important principle. And one other thing that I would say too is timing is absolutely critical. So you might ask, well, how would you know to get in here? Of course, that's a 5-wave pattern. That's your average trend. So a trend reversal there was to be expected. Also, timing indicator would indicate that. If you're interested in my timing indicator, I do give away that for free on a webinar where I train you how to use it and give it to you all for free. Just send me an email at barry@topdogtrading.com and I'll be happy to send you over that info. But yeah, the timing is absolutely critical. And then again, trading with the trend over here on the long-term chart and trend reversal after a 5-wave pattern here is actually an alignment of trade entries. They're just different signals, but they're still both long signals. Now, if you like this video, please understand that, sure, it's free, but if you got value from it, you have a moral obligation to pay it forward by clicking the share button below and share it on social media. Also, if you're watching this on YouTube, please click the thumbs up icon below and leave a comment. I love your comments, and I really cherish what you have to say and your feedback. I'm giving away one of my favorite trade strategies called the rubber band trade. This is an actual trade setup that I'm going to teach you. It has a very high win-loss ratio. It's very simple, too. I can teach it to you in about 26 short minutes. You can get that video explaining the trade strategy absolutely free by just clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with the circle around it in the top right corner of this video. And if you're not watching on YouTube, then there's probably a link below or an opt-in form on this side. Once you do that, I'll personally email the video to you with the rubber band trade strategy.